Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. So what is the best way to buy silver and gold? Is it saving thousands of dollars to make one massive purchase? Is it going all in on silver because you think it's going to outperform? Or is it trying to time every single move, every single purchase perfectly? Well, getting this wrong, you're going to be missing out on a lot of gains. You're actually losing money over time without realizing it. And the worst part is that most people think they're doing it right. So in this video, I'm going to break down my 3 principles that actually matter when it comes to stacking precious metals. Not trends, not hype, no predictions, just what actually works over time. Congratulations to Diddy for being the first comment on my video yesterday. Thank you for the support. Y'all go find him down below to start a conversation. Now, before we get into this, I want to make something very clear. This video is not about telling you what to buy this week. It's not about chasing the market, and it's definitely not about trying to predict where silver and gold are going next. Because the truth is, that's not how you win in this space. Most people don't fail in precious metals because they picked the wrong coin. They fail because they built the wrong strategy. They buy too big, too late. They go all in on one area, and they react emotionally to short-term moves. And over time, that can destroy their results. So instead of focusing on the short-term decisions, we're going to be focusing on long-term principles. Because if you get these right, it doesn't matter what the market does next, you will still be building wealth. Additionally, I am not a financial advisor, and even if I was, I'm not your financial advisor. So this is all just experience that I've learned over the past few years of stacking, and I'm just letting you know that if I was going into precious metals right now, this is where I would start. Just know that I'm only speaking through my own experience, and my experience will be different than yours. So let's go ahead and start with the first principle. And honestly, this one might be the most important. Consistency beats timing every single time. Now, on the surface, a lump sum purchase sounds like a smart move. You save up a large amount of money, you wait for the right moment, and then you deploy all at once. It feels strategic, it feels calculated, and it feels like you're in control. But in reality, this approach fails most people. There's this illusion of perfect timing. The entire idea behind a lump sum strategy depends on that one thing, your ability to time the market correctly. And here's the problem. Even professionals struggle to do this consistently. So what happens instead? People hesitate. They wait for the dip that never comes, or they wait too long, or they second guess themselves. And by the time they're finally buying, the price is higher than when they started, or worse, they never buy at all. There's also a cost of waiting, and this is something that doesn't get talked about enough. If gold moves from $4,500 to $5,000 while you're waiting for a dip, that's not neutral. That's lost purchasing power. That's less gold for the same amount of money. And when you stack for months or years, that hesitation can become incredibly expensive. So now let's flip the perspective. Instead of trying to time it perfectly every time, if you just commit to buying every single month or on a fixed schedule, there's no guessing, there's no waiting, there's no hesitation, you just show up and buy. And this is what's known as dollar cost averaging. And it completely changes the game because now you're not trying to be right in the one specific moment. You're just building a position over time. When you consistently buy, some months you're going to buy high, some months you're going to buy low, but over time your average cost will stabilize. You will smooth out the volatility, and you're going to be removing the pressure of timing. And most importantly, you're going to stay in the market. There's even a bit of a psychological side to this. When you buy once every few months, stacking feels like a big decision. But when you buy every month or every 2 weeks, it becomes normal. It becomes a routine. It's just automatic. And that's where the real growth happens. Because stacking isn't about one big, massive move, it's about hundreds of small, disciplined decisions. What we're really talking about here is having a much longer term perspective instead of just a short term focused on this one buy. This long term outcome, you're going to be thinking 5, 10, 15 years out. And if we fast forward that far, the person who waited for the perfect timing might have a few great purchases. They might also have some gaps, some missed opportunities, periods of inactivity, moments where they sat on the sidelines. The consistent buyer, they didn't try to be perfect, but they built something substantial. In the end, that's what actually matters. The second principle is that diversification beats concentration. This is where a lot of stackers unintentionally create risk because it's very easy to form a strong opinion, thinking silver is undervalued or gold is safer. Maybe even just, let's focus on this one right now. That belief sets in and it's tempting to go all in on your beliefs. And going all in will create that risk. Imagine each purchase as making a small bet. I'm going to bet this much on gold. I'm going to bet this much on silver. I'm going to bet this much on platinum. But if you're going all in, then you're not just making a bunch of small bets. You're making the same bet continually. You're making a concentrated bet on one single outcome. If you're right, that's great. But if you're wrong, your entire stack can underperform. And the thing is, gold and silver behave differently. Gold tends to be more stable and silver tends to be more volatile. And platinum is an industrial metal first. It moves completely different. Sometimes silver will outperform dramatically and other times it'll lag behind. And there are periods where gold holds its value better and there is an opportunity in platinum. So the key point here is you don't know which phase is coming next. You need to diversify your portfolio. When you hold all the precious metals, you no longer depend on one outcome. If gold runs strong, you benefit. If silver runs strong, you benefit. If platinum runs up, you benefit. You're not trying to predict the winner, you're just participating all around. And diversification goes even deeper than just the different metals. You could even think about the different types of gold or different types of silver. Fractional gold gives you flexibility. There's a higher premium, but you get some of that back on the other side. Full ounce gold has different premiums based on either 24 karat or 22 karat. Is it an American product or a Canadian one? If we look at silver, there's 90% silver, there's full ounces, there's fractional silver, let alone all the different coins or generics you could have. Each one will serve a purpose. And as you combine them, you're not just stacking value, you're building a functional portfolio of metals. This type of diversification gives you options. You can sell small portions of your stack instead of large ones. You can react without liquidating everything. You can adapt without starting over. This flexibility increases your value because life changes, markets change, and having options means you don't have to make extreme decisions. And now we get to the third principle, and this one separates long-term winners from everyone else. Patience beats everything, because this is where most people lose money, not in buying, but in reacting. Really reacting to the news and what's going on. You've probably seen the pattern. Gold starts to move and people will sell silver to get into gold. Silver starts to move and people will sell gold to get into silver, and back and forth, trying to catch every move, trying to stay one step ahead. Every time you switch, it's going to cost you quite a lot more than you really think. When you sell one metal, you're going to be selling it underneath that spot price because there are dealer spreads, there's premium, and the thing is there's even the capital gains tax that you're going to accrue from each of these sales. In addition, when you buy the other metal, there's still those premiums. You still accrue a little bit more loss to your stack And every time over time, that will compound against you. Gold and silver move. They don't just go straight up. There are pullbacks and slow periods, and there are moments that nothing is happening. That's normal. And if you react to every movement, you end up constantly repositioning. So let's zoom out far enough. The bigger picture will get clear. Gold has preserved purchasing power for centuries, and silver has played a role in the monetary system across history. These are not short-term trades. These are long-term stores of value. When you are patient, you avoid unnecessary losses, you avoid making emotional decisions, and you allow your strategy to actually work. And over time, that patience will become one of your biggest advantages. For me personally, I do participate in trading silver into gold and sometimes gold into silver. For me, my dollar cost average could only afford 1 gram of gold, and I prefer to dollar cost average my way into silver, and then in a scheduled time perform those trades in a way that will build out my portfolio at the ratios I prefer. Those trades are scheduled just like any other purchase. I think of it as purchasing gold with silver. I'm just going to be doing so in a way that's going to reposition my portfolio about once a quarter. My next trade is coming up in about a month at the end of April, so stick around and see what I trade for then. So let's go ahead and bring this all together. The best way to buy precious metals is not complicated. It's not flashy, it's not exciting, and it doesn't rely on being right all the time, because you won't be. This is built on these 3 simple principles: buy consistently, diversify intelligently, and stay patient in the long term. That's it. Because in the end, this isn't about winning in the short term, it's about building something that will last. At the request of a few subscribers, I've made my own line of Joseph's Reserves It's Today Again coffee available on my website, josephsreserves.com. Every morning is a gift. Not yesterday, not tomorrow, today. It's Today Again is a reminder that God has given us this day once more, with new mercy, new opportunity, and real work to be done. It's the moment to show up, build good habits, and take hold of what's been placed in front of us. Whether it's putting in the work, staying disciplined, saving consistently, or simply choosing to be faithful in the small things, today is where it starts. Encourage one another daily, as long as it is called today, Hebrews 3:13. So, take a breath, take a sip, and let's get to work. It's today again. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you like this video, make sure to go down and give it a thumbs up. Go to the comment section for any questions or comments, or simply to catch up with those you've met in the community. Share the video with anyone you think may like it, and subscribe if you haven't already. But most of all, thank you so much for watching. And just remember, every ounce adds up, so no matter how small, just keep stacking.